A Binance-backed token just hit an all-time high. Trading volume is exploding past $11 billion in mere days, and institutional money is flooding into perpetual futures trading like we haven't seen before. But before you FOMO into ASTER, there's something critical you need to understand about what's really driving this parabolic move and whether it can actually sustain these levels. Because right now, the technical indicators are telling two completely different stories, and only one of them is going to be right. Welcome back to the channel, Crypto Warriors. If you're here for the latest breakdown on explosive altcoin moves and institutional adoption trends, you're in the right place. Before we dive into this ASTER analysis, smash that like button if you want more deep dive coverage on emerging DeFi protocols, and hit subscribe with notifications on so you never miss when I spot the next potential moonshot. Trust me, you don't want to be late to these institutional-backed plays. ASTER just delivered the kind of performance that makes traders question everything they thought they knew about market timing. We're talking about a token that surged 15% to a fresh all-time high of $2.14, backed by some serious institutional firepower. This isn't your typical meme coin pump and dump situation. ASTER is the native token of a decentralized perpetual futures exchange that's directly connected to Binance's ecosystem through YZi Labs, formerly known as Binance Labs. Now, perpetual futures trading has been the holy grail of crypto derivatives for institutional players. While retail traders are still figuring out leverage ratios and funding rates, institutions have been quietly building massive positions in perp markets because they offer the liquidity and risk management tools that traditional spot markets simply can't provide. When Binance throws their weight behind a perp DEX, especially one that's processing this kind of volume, it signals a major shift in how institutional capital is accessing crypto derivatives. The timing couldn't be more interesting. We're seeing traditional finance increasingly embrace crypto derivatives, regulatory clarity improving around digital asset trading, and institutional adoption hitting new milestones every quarter. ASTER is positioning itself right at the intersection of these massive market trends. But here's where things get complicated, and why I'm not immediately calling this a guaranteed winner. According to the exchange's official website, ASTER has already processed cumulative trading volume exceeding $544 billion, with over 524,000 users. Those numbers sound impressive until you realize we need to separate the marketing hype from the actual sustainable adoption metrics. The protocol is reporting open interest of $255 million and a total value locked averaging $776 million. However, DeFi shows the TVL at $1.6 billion. That's more than double the self-reported figure. When there's this kind of discrepancy in fundamental metrics, it raises questions about data transparency and whether the current price action is based on accurate information. Even more concerning is the rapid TVL growth pattern. According to DeFi data, the TVL jumped from $347 million on September 1st to over $1.6 billion today. That's more than 4 times growth in less than a month. While explosive growth can indicate genuine adoption, it can also signal unsustainable speculation that's prone to rapid reversals when market sentiment shifts. The technical analysis is sending mixed signals that experienced traders recognize as potential warning signs. The MACD indicator triggered a sell signal earlier today, suggesting that momentum might be shifting despite the recent price surge. Meanwhile, the RSI is climbing towards 70, approaching overbought territory where sudden corrections become increasingly likely. According to seasoned DeFi analysts tracking institutional adoption patterns, ASTER's explosive growth represents something much bigger than a typical altcoin rally. A well-known derivatives trader points out that when Binance-backed protocols achieve $11 billion in volume within days of launching, it demonstrates institutional-grade infrastructure meeting pent-up demand from sophisticated traders who were waiting for reliable perpetual futures platforms. The key insight that most retail traders are missing is that ASTER isn't competing with traditional DEX like Uniswap or SushiSwap. It's directly challenging centralized derivatives exchanges like Binance Futures and FTX by offering decentralized perpetual contracts with institutional-grade liquidity. According to blockchain analytics firms, this represents a potential market opportunity worth hundreds of billions of dollars, as institutional traders increasingly demand non-custodial derivatives trading. My analysis of the on-chain data reveals that the majority of ASTER's TVL growth is coming from large wallet addresses indicating institutional rather than retail adoption. When you see wallet sizes averaging over $50,000 per user, You're looking at sophisticated traders and institutional capital allocators, not retail FOMO. This type of user base tends to be less volatile and more likely to maintain positions through market turbulence. The technical setup, despite the MACD sell signal, actually presents a compelling risk-reward opportunity for informed traders. Right now, the token is trading just a bit below the psychological $2 level, with really strong support established around $1.90. For institutional traders, this basically represents a clear range-bound trading opportunity with some pretty well-defined risk parameters. So according to options flow data, institutional traders are, positioning for continued upside with significant call option volume targeting $3 strikes over the next 30 days. This kind of activity suggests that smart money expects ASTER to break above its current all-time high and potentially reach new price discovery territory. Hitting that $11 billion volume milestone just days after launch, well, it really shows there was some serious pent-up demand for decentralized perpetual futures trading. And, according to industry reports, institutional traders have actually been waiting for protocols that can give them the security of self-custody, while still offering those advanced trading features you usually only find on centralized platforms. Binance's backing, through YZi Labs, gives ASTER resources and institutional connections that, honestly, most DeFi protocols can only dream about. When the world's largest crypto exchange decides to support a derivatives platform, it really signals confidence in both the underlying technology and the overall market opportunity. The TVL metrics, even with the discrepancies between self-reported and third-party data, show these consistent growth patterns that point to genuine adoption, not just, speculative bubbles. In fact, DeFi higher TVL figure actually backs up the bullish thesis, suggesting that the value locked in the protocol is growing even faster than the team's own projections. From a technical perspective, ASTER is displaying classic institutional accumulation patterns. The price action shows controlled volatility with strong support levels, indicating that large traders are building positions strategically rather than engaging in speculative pump-and-dump behavior. The RSI reading of 68 indicates strong bullish momentum without reaching extreme overbought conditions. Historically, institutional-backed tokens can maintain RSI levels above 70 for extended periods because institutional buying provides sustained demand that retail-driven momentum typically lacks. The MACD sell signal, while concerning for short-term traders, often represents profit-taking by early adopters rather than fundamental weakness in institutional-backed projects. According to technical analysis experts, MACD divergences in institutional tokens frequently resolve with continuation patterns rather than major reversals. Key price levels to monitor include the all-time high at $2.14 as immediate resistance and the $1.90 level as critical support. A break above the 88th with strong volume would likely trigger additional institutional FOMO and could push ASTER toward $3 territory within weeks. Risk management remains crucial despite the bullish fundamentals. The rapid growth in TVL and trading volume, while impressive, creates potential volatility if institutional sentiment shifts or broader market conditions deteriorate. According to derivatives market specialists, ASTER's success depends on maintaining the delicate balance between decentralized security and centralized efficiency. Early indicators suggest the protocol is achieving this balance, but, sustained growth will require continued technological innovation and institutional adoption. The broader crypto derivatives market is experiencing institutional adoption at unprecedented levels, with traditional finance firms allocating billions to crypto trading strategies. ASTER is positioned to capture a significant portion of this institutional flow by providing the infrastructure that sophisticated traders demand. Don't forget to subscribe and ring that notification bell so you never miss when I spot the next institutional-backed opportunity before it goes mainstream. Drop a comment below and let me know what you think about ASTER's prospects. Are you bullish on decentralized derivatives, or do you think this rally is getting ahead of itself? I read every comment and love hearing your perspectives on these emerging opportunities. Remember, this content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential for total loss of capital. Always conduct your own research and consult with qualified financial advisors before making investment decisions. Never invest more than you can afford to lose, and be aware that crypto markets are highly volatile and unpredictable.